Hello, Vetted VA. It is Hammer here this week for your mortgage market update, joined with our guest speaker today, Brandi Brickler. Brandi, you've got the two B's going. That's like when that's why I use the J, like Mary J. Blige, because if I go with Hammer Helmer, it's kind of like, the double A. You got the Brandi Brickler. So you know what I'm
It
feeling.
works. It works.
You, it does. So let me pull up the screen a little bit and stay on track here. So like I said, everybody, welcome to this week's mortgage market update. It is the week of the 24th. Today is August 24th, and we're going to be chatting about what's going on with mortgage rates and the markets and all that good stuff. Our guest this week is Brandi. Brandi, please go ahead, tell everybody a little bit about yourself.
I am originally from Louisiana. I've been in mortgage lending since 2014, where I started in Hawaii. And yeah, I just love what I've joined Vetted VA a couple years ago. And I just love the mission of the group, and I'm excited to be a part of it.
Awesome. So let me see. Let me pop back here. And for those of you that are here, if you're here live, do me a favor. Give me a hashtag live. Let us know that you're here. We want you to be a part of this conversation. So ask any questions that you have. Share any thoughts that you have. We're here, Brandi, myself, to talk not only about rates, but if you've got any kind of question, Brandi is your in-house veteran mortgage professional. She'll be able to go ahead and share insight onto that. And if you're watching on the replay, do us a favor and just give us a hashtag replay and let us know that you were here as well. I do know that many of you watch us, when you've got some free time and you may not be available during the live call. Also, we do monitor this post. So you can go ahead and ask any questions or share your thoughts over the next few days, and we will be glad to answer them for you as well. And also tell us what you guys want to know more about, or what we can do to help you in your journey for home ownership, or if you're looking to refinance or anything like that. So that is it. So, all right, let's do a quick recap of what happened last week and talk about mortgage rates. Mortgage rates did get worse last week. Generally, it was due to a couple of different events with global inflation data. And it is truly a global market when it comes to all of the things going on with the economy. It is a global economy. So we saw inflation in the UK, we saw inflation in Germany, and those different events tended to kind of bleed over and have an effect on our markets, which led mortgage rates to react a little bit. And that was because the expectation is that the Fed, at their September meeting at September 21st, that the Fed will need to raise rates a little more aggressively than originally anticipated. So up till now, most markets have been anticipating a 0.5 point rate hike for the Fed in September, and there's now talk that there will be a 0.75 point rate hike. And as we've talked about before, when the Fed raises rates, it doesn't raise mortgage rates. So you're not going to see that day that mortgage rates are going to go up 0.75 point. But what does happen is that mortgage rates react to the news on the speculation. So we kind of buy the rumor and sell the fact, I guess you'd say. So that's why we saw some movement where rates are kind of creeping up a little bit right now. And then this week on Monday, I said rates could see some volatility, but are likely to get worse through the beginning of the week. And it won't be until Friday that we know if rates are actually going to rebound. And there's a couple of events happening on Friday that are a big deal for us this week. One of them is the PCE inflation data. So PCE is personal consumption expenditures. There's two kinds of data reports that come out for inflation. One is the personal consumption expenditures. The other is the consumer price index. The Fed tends to look at this PCE data. They look at this particular inflation report, and it's their gauge for where inflation is. Now, the Fed has what's called a dual mandate. Their job is to try to keep inflation at or around 2%. Inflation has been at like 8%. That's not good. And they're going to be watching this report. If this report does show that in July, because it's actually telling us all the July data, that in July things were slowing down and inflation was maybe getting a little bit better than previous months, that will help mortgage rates to improve. However, if that inflation data comes in showing that we have not yet peaked and that the Fed may have to be even more aggressive in stamping out inflation by raising their Fed funds rates and their policy rates, then that's probably going to hurt mortgage rates in the near term. The other thing's going to happen. Did you ever been to the Grand Tetons, Brandi?
I have not.
They are out in Jackson Hole, Wyoming, and
And
that
there's a big
is
meeting
where
there
the
this week.
yep, that the symposium. So it's a more casual Fed meeting, and it's a lot of time where the Fed will actually the Fed chair is usually the person speaking, and it's in this case Jerome Powell, and they'll use it as an opportunity to reset market expectations or kind of lay out the groundwork. So the everybody is listening to this meeting. Fed Chair Jerome Powell is going to be speaking Friday at 12 p.m. Eastern time. And when he speaks, we could see mortgage rates react to that news. So that's kind of what's going on this week, everybody. As far as numbers go, rates have been creeping up steadily. But I think, overall, especially VA rates, they tend to be about 0.5% better than conventional rates. And again, that's an average, everybody. You've got to definitely, anytime we talk about rates, I'll always over disclose that rates are very specific to your situation, your credit score, your, where you're buying, how much you're buying. But when we talk in generalities, to give y'all an idea of which direction things are going and why. So anyway, I've done a lot of the talking up till now, Brandi. Let's get you involved. What have you seen in mortgage rates over the last few days, and what do you think maybe might happen next?
Yeah, so especially on Friday of last week, we definitely saw some rate fluctuations, and they haven't really recovered. So rates are up, and on average, I'm saying about 0.5 point rate increase, and maybe even a little bit more for someone in the lower credit score rings.
Okay. Forgive me. I'm looking at the comments because I'm going to the actual Facebook groups and seeing who is chatting in. So
Sure.
as far as locking in a mortgage rate, should people be concerned if they locked in a rate, or if they're closing soon and they need to lock in a rate now? Is it something they should be anxious about? What do you think?
Well, I mean, when you're purchasing a home, obviously the rate has a big impact on what your mortgage payment is. But affordability, as if the mortgage payment is affordable, there really isn't anything we can do in the short term to change what the rates are. So if you happen to end up in one of those unlucky times where rates are just a little bit higher than you really wanted or expected, then really what we're looking for is just to refinance you down the line when rates do drop. And we do believe that rates, within the next year and a half, maybe 2 years, will, drop down into an area where it would be advantageous for someone to refinance who locked in one of these times.
Right. So that's a great point. And we talk about that a lot on these calls, that we have the EARL, the interest rate rapid reduction loan, or rapid refinance loan. Last week we were Googling to see how many R's were what all the different R's stood for, the EARL. And
Yeah.
in that EARL loan, you need 210 days from your due date. You need to have, you need to make those payments. Exactly. So, but guys, don't get worked up. Right now, rates are probably on the higher end of a range. If we look at a range of where they've been over the last couple of months, they're working to the higher end of that range. My personal belief, and again, we don't have a crystal ball, but my belief is that rates are going to work their way back down, but it's going to take a couple of weeks. And it really depends on what happens on this Friday, as we talked about, that PCE inflation data and what comes out of Fed Chair Jerome Powell's mouth, and how that spooks markets or kind of settles them down. So we could see rates improve a little bit heading into next week, but it's very reactionary. It's going to depend on what happens, or we could see rates get real ugly for a week. We saw that back in June. Do you remember, Brandi, when rates, we actually got, that was inflation data back then in June, and rates pushed all the way up. Conventional rates were up into the 6s. VA rates were in the high 5s. But they came back down and they settled back down again. So if you are between a rock and a hard place and you need to lock in these interest rates, don't panic. Remember that you will have an opportunity to refinance, and the timing will probably work out very well for you, because it'll be about 6 to 8 months from now. And we're expecting that the economy is going to slow down a lot, which generally brings better mortgage rates with it. So, that's something that's there. Here's a great question. And David Osborne, thank you, my man. He put it, the interest rate reduction refinance loan is the EARL. Also was a great question here. Let's put up there. Everyone's commenting, which I love. So, does the recently drawn Inflation Act affect mortgage markets? So it was the Building Back Better, but then when that didn't get adopted, they renamed it the Inflation Reduction Act, even though it has absolutely nothing to do with reducing inflation. Do you know much about this act, Brandi, or do you
I
have
don't.
any idea? Okay. So the Inflation Act, the act that was recently passed is called the Inflation Reduction Act because it sounds really good in sound bites, because all Americans are very aware of the inflation issues we're dealing with. But it's actually a climate change bill. It has a lot to do with energy and clean energy and electric cars and subsidies. There's some tax increases in there for corporations that are supposed to offset some of the expenses. Um,
Sounds
most
like political opportunity.
It is, yeah. Without getting too far, I don't want to be
Mhm.
political. We'll try to avoid that. But the answer to the immediate question of, how will it affect the mortgage market? It it is probably going to be at best a non-impact and a non-factor because it won't create more inflation with the idea that the taxes are supposed to offset some of these other expenses. But it's not going to reduce inflation, and it's not going to help mortgage rates anytime soon. Let's be clear about that. It's absolutely not anything there that's going to do that.
Right.
Um, let's see, someone's I don't know who Facebook user is. There's a thing that they have to click that they can show your names. I'll have to get that for you guys next time. I know that StreamYard has that where you guys can show your names. So
Mhm.
otherwise, that's why I look into the other groups and try to see who said that they are going to be moving down. That was Rocky Billor agrees that they will be
Rocky
moving
knows
their
his
way
stuff.
down. So let's see what David, government getting savvy on marketing. Yeah, they're real savvy on marketing, as the student loan thing, which I won't spend more than a moment talking about because it's not rate specific, but the timing of forgiving student loans is perfect for the midterm elections and for everybody to capitalize on that as political parties. So definitely that kind of a thing. Do we think global inflation is hurting domestic mortgage? MBS, for those of y'all that don't know, those are called mortgage-backed securities. And let me pull up the screen for a minute and I'll show you guys. These are mortgage-backed securities. We've talked about these charts before, all these fancy little candlesticks that move up and down. And the question is, do you think global inflation is hurting our domestic mortgage-backed securities? And will Powell be talking about that? Powell may make a couple of comments about global inflation, but he's going to focus about inflation here in the US. And is the global inflation hurting mortgage backed securities? The answer to that, I would say, is definitely yes. In fact, what I'm going to do is let me pull this up and I'll explain to everybody who wants to care about what this looks like here. So last week, here is each one of these dotted lines breaks up the day. So today is Wednesday, then we've got Tuesday, Monday, and we've got Friday, and then Thursday. So I can only go back these 5 days, but see this big drop here on Friday? This was actually the
Big deal.
German. Yeah, that was the German inflation, the PPI, their producer price inflation. So that was what happened here is wholesale inflation in Germany. And then what we can't see on this chart was Wednesday was the UK consumer inflation, which hit 10%. The first time it hit double digits in about 40 years. So we did see a reaction because what happens is it affects those markets and they invest a lot in our bonds, and mortgage-backed securities are a type of bond. So we did see a negative reaction on Friday because of that data overseas in Germany, and we also saw another similar thing happen. But it's before this one was on Wednesday of last week. We saw similar things. So, um, well, that's that part there. So, all right, Brandi. So, what would you like to talk about as far as markets or housing or anything? What do you think that people want to hear about?
Yeah, so in my market, so I'm actually located in, like, physically located in Texas, in between Austin and San Antonio. So I have like two different kind of unique markets. And in some markets, like more the Austin market, sales are down a little bit, like around 6 to 8%, which is just normalizing the market.
Mm-hmm.
And in some places where in San Antonio area, they're down between 11 and 15%. But what's out there is some opportunity, because there are some outlying counties of, say, Austin, where we're seeing the sales increase by 100% or more. Right. So there is still opportunity out there. There are people who are still purchasing. It may not be in the proper of the cities, but people are moving out and finding some opportunities out there, even with interest rates being a little bit higher.
Brandi, do you think anybody that buys a house right now has to worry about losing equity and having the value of that house drop over the next couple of years?
I don't. People smarter than me always are projecting that, the market will normalize and we'll see. I mean, what we saw in 2020 and 2021 is just unsustainable. So those realized gains in equity that people saw, great, you're really lucky. But does that mean that you're not going to see those going forward? You're going to see a more normal equity increase in over time, which is somewhere in between, 3 to 5%
Right.
year over year. So if you're buying, if you just look outward 5 years from now and see how much equity you'll have in your house, it'll be easier to make that decision where rates are a little bit higher and you can refinance, but you'll still have equity in your home.
Yeah, I absolutely agree. To put numbers to it for those of you that want to compare, the last couple of years we have seen like 20% year over year in value increases, whereas it's normally what Brandi said, about 3 to 5%, or we'll call it 4%, is a normal increase in appreciation of home value. Now, there's a lot of talk in the media about home prices being reduced, but that's the asking price. And part of the reason that we're seeing reductions in asking prices is that when everybody asks, the neighbor always asks for more than the last sale. So it rises, and that's what drives those prices up, and they keep going higher and higher. Well, so we're seeing people that normally you see small increases. Well, now you've got agents, real estate agents, that are encouraging sellers to ask a lot more because they were getting it, and people were going above asking prices, and there's bidding wars, and they're waiving appraisal requirements and different things. So we were seeing these big asks, and so if Brandi sold her house and she's my neighbor and she's selling it for 200,000, and then maybe I asked for 250, well, maybe 250 was a little greedy, so now 250 is becoming 220. So what's funny is we see all these big media headlines of how price reductions and everything's coming down, but yet the home value is actually still selling for more than the neighbor. It's just not selling for ridiculously more. And I think I'm seeing that in my North Carolina market. Is that what you're seeing in Texas, in those area markets that you serve?
We are seeing some price reductions. There are some unique areas where we might have even seen some price increases, which I thought was really interesting, because I have a friend who's currently selling in the San Antonio market, and their particular area is still really hot. So, they've seen some fluctuations where things started to come down and then actually starting to come back up because they're getting a little bit more attractive to people who are moving outside of, say San Antonio proper. So I'm definitely seeing some rate fluctuations. And then again, because there are some creative financing situations that have, become more available, 2-1 buy downs, things like that, sellers are still being able to sell at their higher price and then offer incentives to buyers to help them get into the house.
Yeah. And for everybody, to give you all perspective, there's a couple of things in my world that relate to this. So I have family members, my daughter and son-in-law are actually coming in this weekend to look in North Carolina about buying a home. My brother up in New Jersey is set to close in October on buying a home. So I fully support, even with my close family, the idea of buying a home, and think it's a great idea, a great time to be buying right now. Don't get anxious or nervous about some of the media. Remember, their job is to get articles that get clicks, that get eyeballs, that sell advertising. So it's you don't have to necessarily put so much stock in that stuff.
I think there's a lot of opportunity out there. So there's so much opportunity as far as if you were shopping in that 2020, 2021 market and you were just exhausted, the inventory is there, and there are great seller incentives that are happening out in the market that'll help you get into a home with still less out of pocket.
Yeah, no, very much. I agree with you. And we're kind of in that perfect storm where rates are. What happened is rates have gone up, but home prices are stabilizing. When rates do fall, and I say when because I do believe they will, but if rates do fall, then home prices will be pushed higher again. That will put more pressure of prices to go up. And that's why I think we're seeing a little bit of a slowdown, but I think we will see some more big price jumps. And I think getting in now is a good idea, because very few markets and very few price ranges are going to be in a hurt by where we go over the next few months. And when I say price ranges, you have a lot more people buying homes on a lower price end of the spectrum, first time buyers, or maybe a move up buyer scenario versus some of the homes that are more expensive. So there's a lot less homes at what I'm going to call an affordable, nothing's cheap. So we'll call it an affordable price. Yeah. And that's why there's a huge demand, and that demand isn't diminishing. Also, I want to clarify. So I don't get to see the names, but someone said, I think sellers are the ones who have high expectations of what they'll get for their property, and sellers want to list higher against their agent's advice. And that is very well could be the case. I didn't mean to throw real estate agents under the bus saying that they're telling everybody, but their agents on a selling side, most agents, their job is to help the seller to, I don't want to say get the most money, but to get the best sale for them. And that does include selling for more money oftentimes.
I've definitely seen this in some of the markets that I work in.
Yeah. Yeah.
And sellers are just staunchly hanging on to that price. And, it's caused a little bit of contention, but, we're in a different market. So sellers just need to know that may not get the tip top of the market where they saw their neighbor's house sell for back in December, but they're still getting more than, their house should have sold for, in a normal market in 2021 or 2022 or early 22.
Yeah. And that was a great point. It was Alexis's point when I look in the comments that said that. So forgive me, because then it started playing. So I heard you talking what you said a minute ago. Another comment, it's a cultural narrative, kind of like the analogy of annual military reviews. Who got the 112233 or HQMQ or let the standard? Not a perfect system. Some people have higher expectations and risk over time over sale. More reasonably priced will obviously sell more quickly with high demand, high volume, as opposed to low volume, low demand, high price. So I think that, again, that's all great thoughts about same things what we were talking about with the different pricing and everything. So, well, if you guys have any questions, please put them in the comments. We'll stick around for another moment. There is about a 30 or 45-second delay, Brandi. So we'll see if anyone does comment on those. All Otherwise, right. Is there anything that you would leave everybody with as far as, how you think the market is, or questions that they may have about rates these days, or, why it's still a good time to buy a home? Anything you'd want to add?
Well, I think the only thing that I want to add is that, just reach out to a mortgage professional and go over the hard numbers, reach out to a realtor and find out really what's happening in your area. Those big online data doesn't tell you the real story about those hyper, local markets, and just see if it's the right time for you to get back in, see what's normal.
Yeah, that's a great thought, a great suggestion. In fact, to piggyback on that, today's Wednesday. On Monday, I had a conversation with my future son-in-law and the real estate agent referred to in that Charlotte market where they're going to be buying. And I said, I'm, both a blessing and a curse, because I'm a guy that knows all about the markets. I've been in the mortgage business for 22 years, so we can make sure that things are going to go smooth. We're not going to surprise you with things halfway through the transaction that'll make the poor real estate agent hair go white. I said, but also I tend to know a lot, and therefore that makes me a little bit of a know-it-all. So I'll try not to do that to you. And, that's what we're asking that agent for. And I said, we're going to be leaning on you to tell us about the Charlotte market, because I'm 2.5 hours away in Western North Carolina. I know my market pretty well, but you need to tell us as the real estate agent, what is that? What's moving in that market? What's pricing well? What are the comps like? How long is stuff staying on the market? And a real estate agent, especially, I think everybody should work with a vetted agent. If you have one in your neck of the woods, and you can find them on the vettedva.com, they're going to be able to give you that insight. And so those are great suggestions for the real estate agent and the mortgage professional, Brandi.
Yeah, for sure.
Here's a great question. We'll answer this one. Has the market shifting from rural to urban epicenter? How's the market shifting? My area, the people that split to rural are now returning. Are we observing that in Texas or North Carolina? Brandi, do you want to go first or second on this one?
Yeah, I'll go second.
Okay. So for me in North Carolina, we're in Western North Carolina in the Smoky Mountains. There's not really a city flux there. Asheville is a big city, but what I would say is my daughter and son-in-law in Manhattan, that's where their apartment is. They got this apartment about 18 months ago. And I told them back then, as right in the middle, early of COVID, I said, get it, because at that point, you couldn't rent an apartment. The landlords were having trouble renting apartments in New York.
Right.
They were struggling to get them rented, and the price, of course, reflected that. And they got a really great deal. Whereas now they contacted their landlord, and their lease is up in February. And I said, contact your landlord and ask that if you were to break the lease early, instead of the penalties because of the market shifting, people are returning back to New York. And in fact, there's many articles. New York and Manhattan has the highest rents that they've had. There's bidding wars. People are actually offering above asking rent, not even just for purchase of a home where you offer above the asking price, but if something's renting for $2,500, people are stepping in saying, I'll rent it for $2,800. So the landlord was like, yeah, if you want to get out of your lease that I'm making 50 to 60% of what I could be making now, as long as I can rent it out, which they will have no trouble doing, you can get out of here early. And so that's what we're seeing as far as a definite return to that. But at the same point, the demand is so strong. When I talked to the real estate agent in Charlotte, we were talking about Charlotte as a city and then the suburbs around there and getting more land. And there is a big demand for people that want a little bit more space, a little bit more land, a little bit of room from their neighbor. So it seems like they're both in demand, as crazy as that sounds. So that's me. You go ahead, Brandi. It's your turn.
Yeah. So in my market, I have seen, especially, let's talk about just about my neighborhood. So there's a lot of people who bought in, we're pretty far outside of either both San Antonio or Austin, right? So it's considered more rural, but I think some sellers, there's a lot of houses for sale in my neighborhood, and it's a pretty new neighborhood. And what I'm seeing is that people who got into this neighborhood because that's what they could afford are now seeing that they could make some gains on their home and then move out, to what they really wanted, so people who just bought 2 years ago and realized that they're not going to sell for like max profit that they would have, in December, but a lot of houses are going up for sale, meaning new inventory in the market. And then they're getting to take that profit out to where they really want it to go.
Yeah, no, and that's all great points on that one too. So, all right. Well, thank you, Christopher. I think it was Christopher that's been Christopher, Gorman. Thank you for being so vocal today. Thank you, Randy, for your kind words. Thank you, Alexis, for participating as well. Forgive me as I'm jumping between looking at the names to try to match up who's been chatting. Do us a favor. If you guys do think that we helped you out today, go ahead and give us a thumbs up on Facebook if you're on that channel, or a like, or whatever it is. Remember, you can join us each week as we do this. Generally, it's 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, 9 a.m. Pacific. And if you're outside of there, if you're in Hawaii, you got to do the math. So otherwise, thank you, Brandi, for joining us. Appreciate you having me here. Thanks, sir. And I will see everyone next week. Take care, everybody.
Bye.